The solar energy market in India is not just booming, it's skyrocketing. India's economy continues to surge, maintaining its position as the fastest growing major economy. Prime Minister Narendra Modi's resolve, exemplified on the historic day of the consecration of the Ram Mandir in Ayodhya, has led to groundbreaking initiatives like the PM Suryodaya Yojana. As part of Budget 2024, Finance Minister Nirmala Sitharaman announced that 1 crore households will receive 300 units of free electricity through the rooftop solar scheme. Delhi CM Kejriwal added, electricity bills of all residential consumers who install solar panels on their rooftops by opting for this policy will be zero, no matter how much electricity they consume. So solar energy is going to be a major source of electricity moving forward. With India's renewable energy capacity expected to exceed 450 gigawatts by the end of the decade, solar energy is set to play a dominant role, accounting for over 60% of the total capacity. The solar industry is witnessing a paradigm shift driven by technological advancements, energy storage solutions, and grid enhancements. Declining costs coupled with increased decentralization are making solar energy more accessible and affordable than ever before. This trend not only boosts adoption but also ensures sustainable long-term returns for investors. India's commitment to solar energy is unwavering, evident from initiatives like the Solar Park Scheme and PM Kusum. With substantial allocations in the union budget and schemes aimed at boosting capacity addition and rural electrification, the government's support acts as a catalyst for growth, instilling confidence in investors. If you are new to my channel, please do subscribe. Also, check out my playlist, Best Stocks to Buy for the Long Term. I will give you 5 reasons on why you should invest in solar stocks. The number 1 reason is India's rapid economic growth. In recent years, India has maintained its position as the fastest growing major economy globally. A significant milestone in this journey is the commitment of Prime Minister Narendra Modi to harness solar energy for the nation's development. The second reason is PM Suryodaya Yojana. Prime Minister Modi, upon returning from the historic day of the consecration of the Ram Mandir in Ayodhya, launched the PM Suryodaya Yojana. This initiative aims to install rooftop solar panels on the houses of middle and poor-class citizens, providing 1 crore households with 300 units of free electricity every month. The third reason is financial benefits for households. Finance Minister Nirmala Sitharaman, during the Budget 2024 to 2025 announcement, highlighted the expected benefits of the PM Suryodaya Yojana, estimating savings of up to Rs 15,000, Rs 18,000 for households, both from free solar electricity and selling surplus power to distribution companies. The fourth reason is strategic government initiatives. India is actively working towards becoming a solar powerhouse, with ambitious targets like achieving 500 gigawatts of renewable energy capacity by 2030. Initiatives such as the Production-Linked Incentive (PLI) scheme and the Solar Park Scheme are pivotal in boosting domestic manufacturing and attracting investments for solar power development. The fifth reason is massive market potential. The India solar energy market is booming, estimated at $38 billion in 2021 and projected to reach around $238 billion by 2030, growing at a staggering CAGR of approximately 40%. With India standing fourth globally in solar power capacity, the solar industry's future looks promising. Today, we are going to discuss the top 8 solar stocks to invest for the long term. So let's get started. The first stock is a significant player in the solar power industry. I am talking about KPI Green Energy. They provide solar power both as an independent power producer and through engineering, procurement, and construction services to captive power producer customers. Currently, the company operates from its Bharuch plant, boosting an impressive 100 megawatts of solar power under the IPP segment and over 100 megawatts in EPC/CPP projects. Under the IPP segment, KPI Green Energy Ltd is involved in third-party solar energy sales in Gujarat. They develop and maintain grid-connected IPP solar power projects under the brand Solarism, supplying power to business houses through power purchase agreements. In the CPP model, the company takes charge of developing, transferring, operating, and maintaining grid-connected solar power projects. They also provide power evacuation infrastructure and grid-connected land to customers, along with operation maintenance services through separate agreements. Additionally, KPI Green Energy Ltd engages in selling land parcels to third parties, which are then taken back on lease for 25 years for developing solar power plants. The company pays a fixed lease rental to landowners as per the agreement. Notable clients include Cadila Healthcare, Colortex, Megmoney Organics, and others. In terms of revenue, approximately 25% of revenue came from the sale of power, 73% from the sale of power plants, and 2% from the sale of plots. The company has also ventured into wind solar hybrid projects due to their added benefits, flexibility, and grid stability. In recent news, its subsidiary won an order for a 5 megawatt solar power plant. The company has set a target of installing 1 gigawatt by 2025. The stock has hit an all-time high. KPI Green Energy, with a market capitalization of 6,517 crore, operates with a current stock price of 1,821. Price to earning ratio is 48.55, higher than its sector pay ratio of 45.10. Stock price rose 326.69% and outperformed its sector by 237.28% in the past year. Debt to equity ratio of 2.02 is higher than 1. Return on equity for the last financial year was 42%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. The second stock has been at the forefront of the renewable energy revolution. This stock is not only engaged in power generation through renewable sources but also provides consultancy services. I am talking about Vari Renewables Technologies. With India's largest solar panel manufacturing capacity of 12 gigawatts, Vari Energy stands as one of the largest vertically integrated new energy companies. The company focuses on solar PV, with an emphasis on solar pumps, solar parks, captive consumption, floating solar, and rooftop solar. They are also the number one Indian module manufacturer. Looking at the revenue mix, 54% came from EPC contracts, 45% from solar power plant electricity generation, and various other services. Vari Energy doesn't just stop at services, they have a robust manufacturing setup too. With a capacity of 12 gigawatts modules and plans to expand cell capacity, they are gearing up for an even more significant impact on the renewable energy landscape. The company boasts an impressive clientele, having completed over 10,000 projects for giants like ArcelorMittal, Aditya Birla Group, and Reliance Industries Limited. Their operations maintenance portfolio is no less impressive, with 490 plus megawatts under management as of June 2023. They have ventured into green hydrogen with a 1 megawatt plant. The stock is planning for a share split. In recent news, the company has bagged an order worth 183 crores for the execution of engineering, procurement and construction works of a solar power project. Vari Renewables, with a market capitalization of 7,617 crores, operates with a current stock price of 3,839 rupees. Price to earning ratio is 71.72, higher than its sector pay ratio of 37.26. Stock price rose 677.09% and outperformed its sector by 587.68% in the past year. Debt to equity ratio of 0.46 is less than 1 and healthy. Return on equity for the last financial year was 65.09%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. The third stock is a key player in the energy sector. This stock is a powerhouse in the energy sector, primarily engaged in the generation, transmission, and distribution of electricity. I am talking about Tata Power. What sets them apart is their ambitious goal of producing electricity entirely from renewable sources. Tata Power also manufactures solar roofs and plans to establish a staggering 1 lakh EV charging stations by 2025. The company boasts a total energy capacity of 14,381 megawatts, spanning thermal, wind, hydro, waste heat recovery, and solar sources. Notably, 62% of their installed capacity comes from thermal sources. From generating power through thermal and renewable sources to transmission, distribution, and additional services like EPC and OM, the company has a significant footprint. Their retail customer base has expanded fourfold after acquiring a stake in Odisha's distribution business. An exciting aspect of Tata Power's operations is the Tata Power EJ Charge initiative. It is the only charging point operator in India to operate in bus charging, fleet, home, and public charging. With a dominant market share in public charging and home charger installations, Tata Power EJ Charge is making waves in the EV charging landscape. With projects in Georgia, Zambia, and Bhutan, and coal mines in Indonesia, Tata Power is contributing to the global energy landscape. With an aspirational goal of 500 gigawatts by 2030, Tata Power is aiming for approximately 45 gigawatts capacity additions per year. The company wants over 70% of this to be green energy, and they are well on their way, with more than 3.7 gigawatts under construction and 5.5 gigawatts already achieved. The stock has hit an all-time high. Tata Power, with a market capitalization of 1,22,461 crores, operates with a current stock price of 389 rupees. Price-to-earning ratio is 34.31, higher than its sector pay ratio of 21.07. Stock price rose 90.34% and outperformed its sector by 0.93% in the past year. Debt-to-equity ratio of 1.74 is higher than 1. Return on equity for the last financial year was 11.58%. The company is generating increasing cash from operations. 35% by rating from analysts. The fourth stock is a leading manufacturer of LED lights and solar power products. The company specializes in high-end solar products and electric vehicle chargers. I am talking about Servotech Power Systems. They have developed ultra-fast DC chargers and home AC chargers, installing over 2,400 EV chargers in collaboration with oil marketing companies. Servotech's product portfolio is diverse, catering to various sectors. They offer electric vehicle charging stations, solar inverters, panels, batteries, LEDs, oxygen concentrators, and innovative UVC disinfection lamps. The range of UVC products includes handheld lamps, portable disinfection lamps, sterilization bags, and even a UVC disinfection robotic. Servotech is not just a product manufacturer, they are a solar EPC solutions company. They provide complete residential and commercial solar solutions, including on-grid, off-grid, and hybrid solar systems. The company has an impressive track record with projects like the BPCL EV Charger Green Corridor project, the Shivalik Microgrid Solar Power Station, and the Ayodhya 500 kWp solar PV project in West Bengal. Servotech expanded its EV charger business in the Middle East and Africa, partnering with Al Ansari Motors LLC UAE. Additionally, they completed testing of Comport with a portable solar system PV port in Berlin. Servotech has built a robust clientele that includes major players such as IOCL, BPCL, Daimler, Genpact, HPCL, and many more. They have signed a memorandum of understanding with the government of Uttar Pradesh to establish an EV charger manufacturing facility, with plans to invest around 300 crores and generate 10,000 DC EV fast chargers annually. Servotech Power Systems, with a market capitalization of 1835 crores, operates with a current stock price of 90 rupees. Price-to-earning ratio is 114.74, higher than its sector pay ratio of 74. Stock price rose 289.51% and outperformed its sector by 202.07% in the past year. Debt-to-equity ratio of 0.51 is less than 1 and healthy. Return on equity for the last financial year was 13.46%. The company is giving better long-term returns than the industry. It is a good time to consider buying the stock as it is not in the overbought zone. The fifth stock is a leader in the electrical equipment manufacturing industry in India. This stock is the fifth largest LED manufacturer in the country. I am talking about HPL Electric Power. The company boasts a significant presence across 5 key product verticals: metering solutions, modular switches, switchgears, LED lighting, and wires and cables. With overseas logistics partners, the company exports its finest engineering goods to more than 42 countries across Asia, Africa, Europe, the UK, and the Indian subcontinent. HPL Electric Power Limited is the largest manufacturer of on-load changeover switches in India, boasting an impressive 50% market share. In the domestic electric meters market, they command a 20% market share, and in the low-voltage switchgear market, it's a solid 5%. With 7 state-of-the-art facilities in Gurugram, Jabali, Kundli, and Gharonda, the company has end-to-end capabilities. HPL has established a pan-India distribution network with 900-plus authorized dealers and a whopping 45,000-plus retailers. Metering products contribute 53% to HPL's revenue, while consumer industrial segments make up the remaining 47%. HPL Electric Power Limited has a robust order book of more than 1,500 crores. Meter systems dominate with an 82% contribution, while the consumer and industrial segment makes up the remaining 18%. HPL Electric Power, with a market capitalization of 1,847 crores, operates with a current stock price of 285. Price to earning ratio is 51, lower than its sector pay ratio of 81.76. Stock price rose 202.91% and outperformed its sector by 98.18% in the past year. Debt to equity ratio of 0.79 is less than 1 and healthy. Return on equity for the last financial year was 3%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. The sixth stock is a game changer in the solar glass industry. This stock is a key player in the renewable energy sector. I am talking about Borosil Renewables. They specialize in manufacturing extra-clear patterned glass and low-iron solar glass for various applications, including photovoltaic panels, flat plate collectors, and greenhouses. They are the sole producer of solar glass in India. Approximately 25% of Borosil Renewables' revenue comes from exports. The majority of their international customers are based in Western Europe and Turkey. Over the past 5 years, Borosil Renewables has experienced remarkable growth, increasing its manufacturing capacity from 180 tons per day in 2018 to an impressive 1,350 tons per day in 2023. Borosil Renewables signed a power purchase agreement with Renew Green Private Limited, ensuring a renewable power supply. This stock was in heavy demand after PM Narendra Modi announced the Pradhanmantri Suryodaya Yojana. Going forward, the company is expecting steady recovery as its German subsidiary starts operating at full capacity and delivers larger size glass from the third quarter. Borosil Renewables has invested Rs 5 billion to more than double its capacity. It can now manufacture 1,000 tons of solar panel glass per day. It aims to add another 1,100 tons per day capacity by the end of 2025. The company is also looking to foray into the recycling business. Borosil Renewables, with a market capitalization of Rs 7,732 crores, operates with a current stock price of 630. Price to earning ratio is 240.79, higher than its sector pay ratio of 60.92. Stock price rose 33.76% and underperformed its sector by 53.61% in the past year. Debt to equity ratio of 0.52 is less than 1 and healthy. Return on equity for the last financial year was 7.57%. The company is giving better long-term returns than the industry. The seventh stock has been at the forefront of manufacturing high-efficiency solar panels and modules. This stock has been making significant strides in the solar energy sector. I am talking about Insulation Energy. The company's 200 megawatt ASPV module manufacturing unit in Jaipur, spread over more than 60,000 square feet, is equipped with state-of-the-art machinery. The majority of their revenue, a whopping 96.3%, comes from solar PV module manufacturing. In addition, they are also involved in solar power conditioning unit, PCU, and lead-acid batteries trading, contributing 3.27% to their revenue. IEL is not just about manufacturing, they are also active in the trading segment. They deal in solar power conditioning units, PCUs, and lead-acid batteries, both essential components in solar energy setups. Additionally, the company provides integrated solar energy solutions, offering engineering, procurement, and construction services to its customers. IEL has successfully built a geographically diversified presence in India through an extensive distributor network of over 30 distributors. They have executed more than 500 projects and have over 10,000 customers. Some of their major domestic clients include Livguard Energy Technologies Pvt. Limited, Livfast Batteries Pvt. Limited, Shakti Pumps India Limited, Microtech International P. Limited, Sunroof Tech Pvt. Limited, and many more. Insulation Energy, with a market capitalization of 2,468 crores, operates with a current stock price of 1,242 rupees. Price to earning ratio is 230.90, higher than its sector pay ratio of 81.76. Stock price rose 804.26% and outperformed its sector by 714.31% in the past year. Debt to equity ratio of 1.03 is higher than 1. Return on equity for the last financial year was 20.19%. The eighth stock is a key player in the manufacturing and trading of solar power projects, off-grid solar photovoltaic modules, and more. I am talking about Swelect Energy Systems. The company operates with a focus on crystalline silicon technology, offering a diverse range of products and services. Their product lineup includes steel castings, iron castings, solar PV models, solar pumps, solar inverters, hydropanels, and servo stabilizers. Swilect not only manufactures these products but also provides services like designing and commissioning solar plants for customers. They also analyze energy conservation opportunities and offer engineering recommendations. Swilect saw a revenue split with 73% coming from solar energy systems and 27% from the foundry division. When it comes to geographic distribution, 81% of their sales were domestic, while 19% came from exports, mainly to Europe. All their manufacturing plants are based in Tamil Nadu and Karnataka. Swilect has also invested in solar power assets, boosting an installed capacity of approximately 89 megawatts, supplying power to various entities. Swilect has expanded its horizons with subsidiaries like Swilect Renewable Energy Pvt. Limited and Swilect Repower Pvt. Swilect has significant capex lined up, including the establishment of a 500 megawatt manufacturing unit for solar PV modules. Swilect Energy Systems, with a market capitalization of 1,076 crores, operates with a current stock price of 767 rupees. Price to earning ratio is 52.54, lower than its sector pay ratio of 81.76. Stock price rose 141.56% and outperformed its sector by 36.79% in the past year. Debt-to-equity ratio of 0.76 is less than 1 and healthy. Return on equity for the last financial year was 2.53%. Company is generating increasing cash from operations. Company is giving better long-term returns than the industry. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative and subscribe to our channel for more informative videos.